Well, thanks so much for joining us for this edition of Making Sense, where we talk about our finances, our financial institutions, the current trends, and what's on the horizon as well. Joined by Justin, of course, from Forest Area Federal Credit Union. Thanks so much, Justin, for joining us. All right, today we're going to be talking about the cost of credit. So
Yes.
credit comes at a cost, right?
It usually does. It's just the nature of the game.
It kind of is. All right, so let's start off with a nice big broad question, and that's what should we be thinking about when it comes to borrowing?
Well, because of the topic of today's discussion, there's of course a lot of things to think about, but
Sure.
cost of credit, I'm going to ask all our viewers to, when you borrow money, consider the cost of borrowing that money. I ask questions of your lender, ask about fees, ask about the interest rate, ask them to break that down further to tell you. I mean, in most cases as lenders, we're required to disclose these things. But sometimes it gets buried in the paperwork, or sometimes even as the borrower, we just want to sign and get the car, get the house, get the sofa, whatever it is. Take the time, make sure you understand what you're getting into. Not because there may be something bad that you're getting into, but knowledge is power. Understanding what you're agreeing to and what it means in the long term is important. So, a lot of the more common transactions, even buying cars and so forth, there's oftentimes not true fees. The days of application fees and loan fees on consumer loans, there's still a few out there, but they're not real commonplace anymore. But ask, is there a fee to get this loan? And the fee or the cost that really does usually always apply is the interest that we pay, right?
Right.
Borrow X number of dollars, that's how the lender covers their cost. You borrow X dollars, they're going to collect that back from you plus interest. And, that should be most often expressed to us as borrowers in terms of an annual percentage rate. Make sure you know what that rate is. And especially if you're new to borrowing, really consider how much that's going to cost you in the long run. Ask your lender to see if I make my 60 payments on this car on time as scheduled, how much extra am I paying in interest?
Right.
Because, if you have a 6% interest rate, you're going to end up paying out of the gate $60 per $1,000 borrowed on that money. So it's just good to know, because that car that's X number of dollars really in the long run is going to cost you that price plus the interest. And just being aware of what that is and making sure we're okay with that as borrowers and consumers and how that fits into our budget is important.
I'm smiling, Justin, because I think everybody that has ever gotten a mortgage for the first time has that moment where the lender or the financial institution slides that piece of paper and says, okay, after 30 years, this is how much this $300,000 house, how much you will have paid for it. And it's kind of like, oh my goodness,
Yes.
So there is a cost, but having that knowledge of not only what it's going to cost you today, but what it's going to cost you down the road, so that you're comfortable and good with it. It doesn't mean that it's a bad decision. It's just having that awareness sounds like that's really important.
Yes, absolutely.
All right. We hear a lot about payday lending. What is it, and what do I need to know about it?
Yeah, so payday lending is exactly what it sounds like. Sometimes we find ourselves running short at the end of the week, the end of the month. That paycheck has come in. It's gone to all of the things that we were responsible for taking care of, and we're just running short. Once upon a time, and I'm sure there are still employers out there that do that. An employee has run low and they get an advance on their next paycheck. They're borrowing that money against what they're going to earn in the future. Well, now there are lenders out there that specialize in basically the same thing. They're maybe willing to give you a loan against your future earnings, that's going to come in the next week, the next 2 weeks, so on and so forth. So it's really when some of us get into that position where the money's just run out, and there could be a number of reasons. And first thing that I would like to throw out there, the one thing that I've learned being in this business for 20 years is bad things happen to good people.
Yeah.
Just because a person or a family runs out of funds at the end of the month or the end of the week, it doesn't necessarily mean they weren't trying like crazy.
Right.
Sometimes bad, unfortunate things or circumstances happen to good people, and that's a lot of how some of these places have come to be. Payday lending is something that's out there for people to work with. I also encourage people, always look to your financial institution, your bank, your credit union, look at all of your options. Because when it comes to payday lending, I hate to paint everybody with the same brush, but it can typically get really expensive in terms of fees. And again, you're using that money, that next week or 2 weeks paycheck, for an immediate need now. Well, how are you going to cover 2 weeks from now, the groceries and the gas bill and the so on and so forth? So it can be payday lending. I throw out caution. It's obviously created its place in the market, but I would encourage people to slow down and think about a better long-term plan. Or if you're using payday lending, make sure it's part of a longer term plan. How am I going to get out of this cycle, and who can help me do it? Because short-term money when somebody finds themselves in a position where they really, really need it, that's when they can often be taken advantage of the most. That's where, if you need something now, it might cost you more to get it right now. And payday lending can fall into that category if you're not careful.
Well, and I would imagine if you're in a situation where you do need this, it is hard to get out of that pattern. If you're 4 days away from getting the paycheck, but you need the money now, then your next paycheck, you've started spending that 4 days early, right? Because you're out of money. It's very hard to get out of those situations. So again, know what you're getting into before you accept that loan and try to have a plan out of it. And I imagine part of that long-term plan is having an emergency account or having some money set aside should the transmission go out, because we all know bad things happen in threes. And they never happen when you just cash the paycheck. They happen when you cash the paycheck 6 days ago and it's running tight. So good. Again, know what you're getting into before you agree to something. So how do you, if payday lending is not a long-term financial solution that very many financial planners would say, yeah, it's a good strategy, go with it for the long term. How do you avoid needing a payday loan? How do you work a system so that you're not in that situation through maybe no fault of your own?
Yeah, and just like we've made mention in previous segments, look at a budget. Yeah. Seek help from a trusted advisor, friend, or family member. Work on that budget. Know what you're dealing with and what you're up against. That having that knowledge is going to be power to begin with, and then start working on it. And you can start so small. You can start with pennies a day. Change in your pocket at the end of the day. Put it in a jar. If that's all we've got to start with, at least it's a start. Maybe saving your deposit on returnable cans and bottles, and saying, hey, I know it's not a lot, but that's what I'm going to put aside, and work on building up a little bit of a savings so that I can help out when things get a little tight. There's always tax return season. If you're an American that may be looking at a tax return in the next tax cycle where you're going to get a refund of any amount, consider putting all or a portion of that away into savings. I know a lot of Americans look at that as an opportunity to fund a purchase, a vacation, or whatever. But if you don't have that savings account already established, if you're fortunate enough to have an event in your life where you're going to have a sum of money, just like finding a $100 bill maybe in a pocket, or a $10 bill in a pocket of the winter coat, boy, put that aside. If you don't already have something aside, put it aside and start making those habits. And that's going to help you stay out of those situations. Eventually, it's going to get you to a spot where maybe you can stay out of that next situation that arises.
And I think the key word that I'm hearing there is eventually. This is that saving can mean sacrifice, and it takes a while. It
Yeah,
takes a while, if you are in a payday loan situation, it probably takes a while before you have enough that you feel comfortable, that you have that emergency fund, that you have that safety net. It's going to take time, but every journey starts with the first step, right?
that's
So
right.
make a plan. Go talk to your financial institutions because they can help you with this. If you walk in and say, "Hey, here's my situation," they can probably help you with that. All right. What about when it comes to us spending money? What about like financing offers? We hear this all the time. 90 days, same as cash, special credit card offers, buy now, pay later programs. Uh, Here, let's paint with a real broad stroke. Good, bad, ugly. Where do these fall on the spectrum?
They can be any of the above, right?
Right.
So it comes down to a couple of things. Make sure you know what you're getting into. Just when we talked about what to think about when you're borrowing, know what you're getting into. There's good programs. There's programs that maybe can raise your eyebrows a little bit, but yeah, these types of lending promotions or financing promotions that you mentioned, we hear them on the TV, we hear them on the radio, we see them online. Buy now, pay later. Some places call it flex payments. It's 4 payments of X, and it adds up to exactly the price if you were to pay for it all at once. They generally fall into 3 different categories. You might be into a zero interest category.
Okay.
You might be in a deferred interest category,
All right.
or you might be in a situation where it's reduces the interest for a fixed period of time. Okay. And these are just different ways to entice us to buy or engage in the activity of acquiring this asset, this thing now, and we get a little benefit because the financing is attractive. But again, know what's going on with it, because there are a lot of programs out there, because retailers, so many of them, they're about selling their product, and if they don't offer an attractive way to get you to buy their product, they're not going to sell the product. So they might have really good programs, but there are other ones out there. Let's use like a 90-day same as cash, or some buy now, pay later programs. Yeah, they might say, it's 90 days, same as cash, 0% interest. The problem becomes, what happens if you don't have that item paid off in 90 days, or you don't get it before the end of that promotional cycle? Some places, the interest goes up to a very high rate.
Right.
Other places, other programs, they might even charge you interest back to the very first day that you bought the item.
Oh, retroactively, like
it might go retroactive. That's there's a couple of industries that have been known to do that in the past. So just as tedious as it is, read the fine print. Just know what you're getting into, so that there aren't any surprises. And you know what? If it's something that you're interested in, but you're just not comfortable making that decision, have a trusted advisor. Go to your financial institution. Go to somebody you trust. Say, hey, would you read this over? Am I crazy for thinking of doing this? Because maybe they'll pick up on something that you didn't notice, or they might look at it and say, this looks like a really reasonable program. This might be a good way for you to make that purchase.
So again, do your homework. Ask the questions. You're not possibly suggesting, Justin, that we read the fine print, are you? Is that like, are you all those disclaimers and everything? We actually have to read that?
For some reason, I get excited about the details. So I like reading the fine print. I realize it.
Well,
but work with people. Work with people that you trust too. You build a relationship with somebody at a store, at a dealership, anything like that. You're going to get a sense for whether or not it's a legit deal too.
I trust your gut too. Trust your brain, but trust your gut as well. All right, guaranteed finance options. We hear about those a lot at like auto dealerships. Is that a good way for someone that has like damaged credit to get an auto loan?
Well, it's often a way. That is definitely an avenue to take to get that vehicle that you want or need. I'm just going to throw out there, use a little caution. Advertisements that say we approve anybody, that usually just means, oh boy, it's going to cost you. It's going to cost you dearly. So make sure you spend a little extra time. That one, I would say, read the fine print. Unfortunately, sometimes we get into situations where we need that vehicle, we need whatever that thing is, and Sometimes, we're just going to have to bite the bullet and do it. But in those situations, if you think you fall into that category, I'd recommend get a second opinion. Talk to one other lender and or a trusted advisor and say, oh, is this the right? Am I making the right decision, or are there other options available to me?
It sounds like it's a lot of that is with this is really truly think, do you have other options to explore, and then make your decision. That first option may be the right one, but I think when people get in a stressful situation, maybe a little panicky, and suddenly there's a way out, whether it's a payday loan or whether it's the car loan or whatever it is, when you find that solution, don't be blinded by it. Come talk to your financial institution. Maybe there's something else that you haven't thought about, but it sounds like consider all your options before you make that decision.
That's right. Definitely.
Well, that makes sense. All right. You're thinking about making a large purchase, and you hear this a lot. They talk about it on the money shows, an opportunity cost. So what is an opportunity cost, especially when it comes to, like, let's say, larger purchases?
Yeah, opportunity cost is, what are you going to forego or give up or not be able to do as a result of maybe obtaining this financing, buying this house, buying that car? Especially when we talk about the cost of credit. And I know that I've been honing in on the types of credit that potentially may cost our people in our community more than the average going rate.
Right.
At some point, you have to ask yourself, how much am I willing to pay for this item plus the interest? And what else do I have to give up to get it? I mean, let's take, if you're in a high risk, if you're considered a high risk borrower and your interest rate is going to be 15 to 20%, now you're paying $200 per $1,000 borrowed just in interest. What else could you use that $200 a month for per $1,000? And that's where, if you don't have a budget, if you haven't even just written down on paper in 2 columns the money I make and the money that I spend, and understand it, you may not even know what you're giving up. But yeah, you might be giving up, the steak dinners in lieu of cereal and bologna. You might be having to give up that annual family vacation, even if it was just a camping trip up north or whatever it is, because high interest can really cost you. And the same goes for making that purchase. If I'm looking at a vehicle, am I buying more vehicle than I need? Am I stretching into the want area versus the need area? And it can be easy to fall into that trap too. So however much we spend and however much it costs us for that credit just means that's less money we can put in savings. It's less money we can allocate to our other needs and wants. And that's your opportunity cost. You're choosing one thing over another at that point. So understanding the true cost of credit in that transaction and what other things you might need to cut back on or give up to get that is, I think, an important thought and process to go through for an individual or a family, because it might mean things change.
Well, and it sounds like that opportunity cost is not just a today thought, but you have to look at, that's a cost that I'm going to have for 5-6 years on a car loan, 30 years, 15, 30 years on a house loan. That opportunity cost, it comes back and knocks on the door every month, right? Like, I mean, it's not just a today, do I want chicken or fish? I'm going to have to pay for that cost potentially for a long time. Am I willing to do that? Can I afford to do that? Is this the best option? Retailers offer special financing all the time. It's always the thing that's said really fast at the end of the commercials that we see on TV. What do we need to watch out for?
Well, so from personal experience, here's what to watch out for. Same thing. You know what you're getting into. My personal experience was I bought a washer and dryer set, and we were excited about this because people my age, a couple of that's exciting stuff, right?
It's a good time. It's fun
washer and dryer set. Right. And this actually wasn't a financing offer, but it was a buy this item, you get a $400 rebate. Right. great deal. I mean, I was excited about it. $400 rebate. And we get in there, we get looking around, and it turns out they didn't have the set in stock. We could get this other set, same brand, faster. So we did that. Turns out the rebate was only eligible on a certain model of that brand. So that's my little cautionary tale there. And I guess I didn't read enough of the fine print there, Mark. But
well, that'll teach you, Justin. You should come on over to the dark side of us fine print readers. Yeah, right. So again, know what you're getting into. Mind the details, because this is your money, right? Like,
yes.
if we're not motivated to read the fine print when it comes to our money, then we should be, because it's making a difference. All right. So what are some simple steps that we can take to evaluate the cost of credit when it comes to financing promotions? And let's talk simple.
Yeah. Know when your promotional period begins and ends.
Okay.
These are common on credit cards.
Sure.
Know how long you got that rate for.
Okay.
Make your payments on time. That's just a simple one. If you have a promotion or a special offer, make your payments on time. Otherwise, it could be gone. They can, a lot of times there's a clause in there. They can take that promotion away if you don't pay on time. And then finally, keep track of it. Write yourself a note. Check your statements every month. Make sure that you're getting that benefit that you thought you were going to get. Because again, if there was a little bit of hiccup in there somewhere, it could start costing you a lot more than you planned on. And you may want to adjust. You may want to see, hey, can I pay that off in another way, a little bit faster, because, I was a few days late on a payment and now I've defaulted to the standard interest rate. Just keep an eye on things. Watch it.
Pay attention to the details. So with all of this, painting again with a very broad stroke on this, with all of these types of things, there are good, bad, and ugly. It makes sense for us to do the homework, read the fine print, get the details in place, and talk about the options besides what's right in front of you.
Yes.
Does that sound right?
That's just it, Mark. Very well.
And if we save, we can get to the point where maybe we don't have to do some of this stuff.
That's right.
Keep those canned deposits coming. Keep depositing. Save pennies, save pennies, save pennies. They add up. Is that right, Justin?
Yeah. You watch the nickels and dimes and the dollars take care of themselves.
Those $5 cups of coffee get pretty expensive when you have to start. Yeah, I hear you. Hey, Justin, thank you so much for this great advice. All stuff that we should consider when it comes to the cost of credit. I appreciate your time, and thanks for joining us tonight.
You bet. Have a great evening.
Thanks.